Hi everyone, today I'm going to be talking about Darktrace, a FTSE250 company, previously FTSE 100. It's a relatively new IPO, less than a year on the public market, and in that time it's been as high as £9 and as low as it is today, about £4. It's a pretty rare 30-40% a year SaaS company, mid-cap UK growth company, trading at around £2.5 billion as we speak. And these you don't see this every day on the FTSE. Basically, a lot of the times the true UK growth is on the AIM or their small caps, and it's pretty rare to see a 30-40% a year tech company on the FTSE or on the UK market in general. So it's a really interesting company that I thought I'd analyse. Darktrace is at its core a provider of AI for enterprise. It's basically a cybersecurity company and is a pioneer of a lot of autonomous response technology. It's basically adaptive security. A US business is hacked every 16 seconds. Cybersecurity and adaptive security is going to be absolutely key to the world economy, and Darktrace is trying to position itself nicely to benefit from them. It has some really ambitious technology plans. Its initial product was the detect phase, basically. Its enterprise immune system, launched in 2014. Self-learning AI that spots advanced attacks without reliance on rigid rules. It's completely self-learning. Then they worked on Respond, so we're not the world's first autonomous response solution. They call it kind of digital antibody. They're currently working on healing, basically to address the aftermath of attacks, and the shipping to some early adopting customers, the prevent system, so mitigation of risks and weaknesses. Again, all AI powered. So you can see there's a lot of long-term tailwinds for companies like this working in AI and machine learning. So this is just an overview of Darktrace's business model. Darktrace currently has around 5,000 customers. They believe their total addressable market is greater than 150,000 customers. So you can see, if you're willing to believe management's vision, then this is a tremendously early stage company that is still producing fine revenues, as you see in the slide over. They spend a lot on research and development, and this is to push out new products, maintain the current products, maintain growth, and they're really aggressively spending on R&D, in my opinion, to fight the industry incumbents and to carve out their own industry. Darktrace believe this is a product that fits all sizes and sectors. It's going to be used in many different industries, and this is absolutely key to Darktrace, to maintaining Darktrace's growth. Currently, its revenue is on a compound annual growth rate of 52% for the previous 3 years, which is absolutely tremendous. And this is all high quality recurring revenue. 99.5% of Darktrace's revenue comes from subscription contracts, so it has a high percentage of annual recurring revenue, and the subscription contracts are typically 3 years, so it's highly predictable recurring revenue as well. This makes it a really attractive company to own, in my opinion. So looking at this year's financial highlights, 281.3 million in revenue, that's a 41% growth. Gross profit, 252.9 million, that's a 39.3% growth over the previous year. They're operating at a loss because they're pouring a lot of money into R&D, and the cash is looking healthy. They've increased the cash dramatically, mainly because of the IPO. Recently, actually, they announced a 30 million share buyback, so the £30 million share buyback, that is. So they're really confident that the share price is depressed at the minute for a company that's in this kind of growth phase to be buying back their own shares. That's very, very uncommon, in my opinion. Just taking a deeper dive into the revenue numbers, you can see what a fantastic company Darktrace has been over the last few years. Revenue grown at a 52% compound annual growth rate over the last 3 years, so it's roughly four times its revenue from 2018, from $79 million to 281. Almost all of that is recurring subscription revenue, 99.5% or greater than, and 758 million in contracted backlog. As I said, these are on 3-year contracts as it stands, so they have a lot of backlog and a lot of predictable revenue going forward from existing customers. So that's all well and good, but what I like to see with a SaaS company is Moat and their ability to basically fight off competitors and prove why it's a special company. And in my opinion, the moat for SaaS companies often is high switching costs, make it difficult for customers to leave or want to leave, and then they will stay with your product, and it will create a robust company with predictable revenues. As you can see from the left hand side, since 2018 they've been dramatically increasing the amount of customers with more than one product, so it's 2, 3, 4 products plus. This increased platform adoption is absolutely key. I think this shows the strength of Darktrace. I'm by no means a cybersecurity engineer. I do not know the ins and outs of this product to that level, but what I do know is that customers that are using it regularly are increasing the amount of increasing their adoption, increasing the amount of pros they use, which is a great sign. And their annual recurring revenue retention rate net is over 100%, which is again exactly what you don't see. Customers are spending more. Even though they're only on short-term contracts, they're consistently spending more, and they have a low churn. Again, absolutely excellent, and shows really strong moat in my opinion. So Darktrace recently dropped out of the FTSE 100 into the back into the FTSE 250. This article questions whether this was to do with the Peel Hunt report in late October, and they kind of questioned the effectiveness of the product and recommended selling the shares. In my opinion, this is less to do with the Peel Hunt, and it's more to do with the stock getting a bit carried away. The lockup period is also in around this time. I think this is completely normal for a high growth company that gets a bit carried away with the valuation, gets a bit carried away, and the shares pull back to IPO price. I don't put much stock in analyst upgrades and downgrades because I think they're completely unreliable and most often wrong in my experience. So looking at the stock chart, you can see it's down from its highs of around £9 to now £3.76. Really hurts if you were buying at the £9 range. I think it will get back there in the not too distant future. It's now a £2.6 billion company. It's growing 30-40% a year, trading at around 10 times sales. When you compare that to companies on the American market, that is cheap. There's not a lot of comparisons in the UK market, to be honest, so it's really hard to compare because it is vastly different to the American market. It's currently spending a lot on R&D and customer acquisition, so earnings are not present, nor will they be for a while. I think this is excellent growth for this price, and for my money, this is one of the best pure play growth companies on the FTSE. Definitely not without risk. As I said, there are detractors, there are definitely bears, Peel Hunt being an example, and the product has only time will prove its usefulness and its robustness. I believe that current adoption rates and revenue retention show that this is a company that is making a useful product that has incredible tailwinds, and I think only time will make this company better, and cybersecurity will become more necessary in the future. So I think this is, again, definitely not without risk, but I think this will be a nice buying opportunity, and I think this is a buying opportunity that I'll be looking at very closely in the near future. But again, this is not financial advice, so please do your own research. But it's definitely high up my watch list at the minute, and one of the most attractive UK companies in my opinion.